Subrahmanyan, of course, you guys took us through the numbers yesterday, and good set of numbers despite the challenges in the year. The one thing that was very interesting, that despite the challenges in order inflow that you witnessed in the year, and especially in the domestic market where order inflows declined in the financial year, you have given a target of 12 to 15% growth in order inflow and revenue. Help me understand what's gone behind that thinking.
It's a positive thinking, Rachita. It is just positivity. I think we have done well. We grew our orders by 10%, we grew our sales by 15%, and we grown by profit by 23% and 10% quarter on quarter. I think it's a very good record to have under a very excruciatingly tough situation, both borne out by COVID, the European war situation, as well as the commodity price increase and logistical mismatch that is happening. So we have withstood that. So what it shows for us is the organization and the thousands of people who work here have been resilient. Have taken the task on hand to its logical level, have borne the toughness of the situation, and that gives us a good feeling that LNTites are able to outperform even in an extremely tough situation, and therefore, as the situation eases, we can continue on the path. The momentum has come in now. One of the biggest challenges had been to get people to site. As you know, our IT services group could work from home, but on the main project group side, we could not do that because unless you do physical work, there was no billing that was possible. We normally employ about 65,000 staff and about 290,000 laborers on our project side. There was difficulty there. 2 times the labor went away and we had to bring them back. That's not easy. Last 24 months, we have not worked for 8 to 9 months because of the COVID. Now the momentum is back. People are back to sites. But all there's a worrying thing is the commodity prices, for which we have taken adequate measures. But beyond that, I think we're pushing on all cylinders, and that gives a possibility that that order inflow, sales, and profit can continue to grow in this environment.
No doubt about that, that your team has really done a great job. But in terms of the macro environment, one of the things that you and Mr. Shankar Raman shared during the press conference was that there were significant deferments in terms of projects last year, and also that the speed at which government orders were coming the year before, that was missing. Given that in the background, what is your outlook in terms of the tendering process of the government, and do you see any further delays in project ordering as such?
No, I don't think you captured it to that extent, Rachita. Let me clarify that. What we meant was, last 2 years we had, in my opinion, blockbuster budget from the Honorable Finance Minister and from the government. Very positive budget. Now, the budget has been translated into action. The many aspects on which the government has been extremely positive about. If you see all the core sectors, huge amount of investment has been planned out in all these core sectors, whether it is roads, whether it's railways, whether it's water projects, whether it's power transmission, whether it is hydrocarbon, and such. And we are present in all these areas. So it's had a positive effect on us, and that's why you see the robust order growth at our kind of volume and level. It's a fact. Now, what has happened? When the crude prices suddenly shoots up, and India being heavily dependent on crude, some of the money that we have budgeted gets diverted to buy the crude. We buy nearly 180, $190 billion of crude per year. And therefore, the diversion of money. Second, there is an inflation rearing the head not only in India but across the globe, and we need to be careful and watchful about it. Third is also the fact that due to this very unnatural increases in commodity prices, very unnatural increases in commodity prices, which is not borne by only the raw material price increase, but also some excess profit being made by the commodity manufacturers, the infrastructure space does get affected. Now let us look at it like this. When a government budgets a project, let's say it puts a figure of a bridge or a road at 100. Now when we all bid, we naturally end up bidding 109, 110, something like that, even to be L1. That is because government budgets are made 2 years earlier or 3 years earlier. And when we bid, there's an inflation and such coming in, therefore we bid higher. And within 10 to 15% range, the government department does go through the procedures and process, gets it approved and places the order on us. Now, due to the commodity price increases, the price by itself has gone to 109, 110. We'll all end up bidding 105, 120. Now, when you bid 20% higher, it's not possible for government departments and public sectors to just like that place the order. It goes through lot more debate and justification within themselves before they place the order. So that is what we meant by saying that there could be some deferment or shift on the right side when we look at projects. And that is bound to be a bit irritating because what should happen in 1 month will take 2 months or 3 months to happen, and therefore there's bound to be a shift. And that is what we mentioned when we said that due to price increases and such, there could be some movement on the right side. We need to factor that in as we move forward.
How are you looking at the margins? You did see a drop in the margins for the whole year, and obviously you have explained the issues on the commodities front. In terms of your current order book and your ability to pass through, where are you looking at the margins for the next fiscal?
Our margins are dependent on two factors, many factors, but two important factors, Rachita. One is we are a project company. And we don't take margin right on day one. Margin is recognized only after the project is 25% of its cost. Before that, we do not recognize margin. So in this scenario of COVID, etc., there are some jobs which ought to have come for profit recognition or valuation in the previous year. It has not come. It has got deferred to this year. Second, we did expect some due to commodity price increases. We did wantedly defer some projects. For example, if you could have bought some sheets and rolled it into pipes in certain water jobs, we didn't buy it because we felt the price at which the price of sheets were there were too costly for us to buy. We did have flow to the project from a project planning point of view. So we said instead of buying it in next month, we'll buy it in the next 2 months or 3 months later, and we could still manage the progress at site. So when you do that, and a cost of material is significant into a project, 60%, 70% at times, and therefore the project progress has not been there, therefore sales do not come in and margins are not accrued. Now, more importantly, 85% of our contracts are covered with price variation or reimbursement or such other clauses. But about 15% of the contracts are not covered by this. Today, the inflation is such that even the WPI increase does not reflect the inflation. Inflation is slightly higher than the WPI graph. So we are having some cost pressures within the system. So we'll have to manage it. We'll have to do projects faster. We'll have to take it up with our clients. We'll have to hedge materials. All these aspects are going on within the company. But one cannot run away from the fact that there's a cost push. And that is what is shown in the slight margin movement to the left. And that will continue during the year. But we are confident that we'll find ways to manage it.
Of course, you have in the past managed the margins pretty well. The keyword being, cautiously optimistic, as you always say. Mr. Subramanian, help me understand what is the pipeline we are looking at for this fiscal in terms of the projects that you can potentially bid for, and what are the sectors that will drive the growth here?
So being very cautiously optimistic on this, our prospects as we look at is about 8 to 9 lakh crores. It is more or less the same as last year, but it's too early. It's a very early part of the year. As we go along the year, this will definitely go up. We do expect momentum to pick up on this as we move forward. And the key sectors, as I told you, are in water, power transmission, minerals and metal space. It's also in hydrocarbon space. Yeah, these are the four big areas that we hope the orders to come in.
Mr. Subramanian, the other very exciting thing that you mentioned was Lakshya 2026. This was something that you had to kind of defer a bit because of the COVID impact. Now that it's finalized, what are the targets? And give me a sense of what L&T could look like after this strategic plan that gets over in the next 5 years.
As you know, Rachita, we are in three broad sectors right now as an organization. The largest being the EPC projects, second being the high-tech manufacturing, which includes our heavy engineering and defense, and third is the services sector, which includes LTI, Mindtree, LTTS, that is our technology services company, and as an outlier, L&T Financial Services Company. So when you look to 2026, these are the three sectors that we will be inside. If you want to call it four sectors, that will be inside, including financial services. Now, all our investments and plans will be centered around this. Now, in this, the EPC project business will continue to grow at 11 to 13%. If you look to last 2 years, it is not the right way to see because of COVID. That business did not grow as much, but last year it has grown compared to the previous year. But that's not the right comparison again because it was COVID affected. But if you look at the trend overall, it continues to grow at 11 to 13%. The high-tech manufacturing business will grow at between 12 to 15%. Our shops are full right now. We continue to expect that these sectors will get sufficient orders with the growth of refinery, petrochemical, green business and such, and that will grow at 12 to 15, 12 to 15%. The services business, leave out L&T Financial, I'm talking about IT services and technology services, have been growing upwards of 20-25%. We do believe with the merger of LTI and Mindtree, subject to statutory approvals, that company will see robust growth. LTI is very strong in ERP space, and Mindtree is very strong in customer experience space. A combination of these provides a fantastic service input into the clients. We can robustly grow the sector with both these companies coming together, especially on the digital cloud space. And therefore, as we look into the future, you will find that EPC project business, which is about 70% of the company, may come down to about 65% of the company. And that 5% space could get occupied by the IT and technology services business, which means the market cap of L&T, which is now 30% by IT and technology services company, can become 40 to 45% by IT and technology services company. So will be a more profitable average, weighted average profitability would go up. We'll be more a technology solutions provider company, and that is robust and good from an overall point of view.
That's an interesting transition. The other transition that you have been talking about is the energy transition, and how L&T will increasingly look at the green energy business. Give me a sense on what's happening there. What kind of plans do you have? You have made some move on green hydrogen initiatives. Give me a sense on what's the plan there.
So as you are aware, L&T has been a truly integrated power company, right? We were right from mining equipments to transportation of coal to making our own boiler turbine, to putting up EPC power plants, to running our own power plant, to selling power, to doing power transmission distribution projects. And we were also in the medium voltage, low voltage switchgear business. Now, one by one, we have moved away. We have sold off our medium voltage, low voltage business. We are about to sell our Nabha Power business. We don't find huge traction coming in our boiler and turbine business coal-fired, because hardly any coal-fired plants are being put up. Maybe one or two will be put up, but not too many. But we do not want to lose the fact that we've been in this business for decades, and that is very fundamental to L&T because that is the backbone of the economy. Power is the backbone of the economy, so we need to be in it. So looking into the fact that coal-fired is moving away, we thought, what can we do to be in the sector? And the logical area to be in was a green power business. Now, we again do not want to get into solar business and solar developmental business. We are the largest EPC solar, but we don't want to be invested in the solar business. So that was ruled out. So what was left is to be in the manufacturing area, which is electrolysis. This is something which can be done in our turbine factory. And therefore, we thought about this in a more serious manner. So we are in touch with various technology players across the world. And if the right technology and the momentum comes in, we will put up investment to make electrolyzers. The investment will be in the region of about 1,000 crores for a 500 megawatt electrolyzer production capacity, which is more than adequate at the moment. We are also tied up with IOCL. With IOCL, we do a lot of work for IOCL. IOCL does have gray or blue hydrogen made out of coal or gas to make hydrogen anyway for its own requirements of ammonia and such other petroleum products. From their own green point of view, they would want to convert this hydrogen into green hydrogen. And the idea was Renew, IOCL and L&T can play a part in doing that. And if there's some investment called for in that, we will do that because it will be a take or pay contract as we move on. And therefore, this was thought about as a good area to be in. So that is a limited plan that we have in this business. We also thought that being in the green energy space, we will have to be in the grid battery business, storage battery business. This was storing power. And it at the moment it's not viable because the battery costs upwards of $190 per kilowatt hour. It needs to come down drastically for it to be viable as a power source. It will take some doing. We are again in touch with some technology players to see how to jointly do some research and development to bring the battery cost down. And if that happens during the later part of the plan period, it could see some investments in the battery space, but not right now.
Very interesting plans there, and it can be a game changer for the industry as well, because that's really something that the industry is looking at. Mr. Subramanian, help me understand. You mentioned Nabha Power Plant. It is one of the candidates for divestments on your list. The other two being IDPL and LNT Hyderabad Metro. Give me a sense on whether we are expecting some resolution fast on these three assets that you're looking at divesting?
I'll start with Hyderabad Metro, Rachita. As you're aware, there were two factors which were not going well for the project. One was due to COVID, there was a lot of IT and business people not attending office, and that was the main source of traffic for the metro. So that had gone down very drastically. Now it's sort of coming back, and as we speak now, it's about 300,000 people per day, which is reasonable. The second scourge of the project was a huge debt. There was nearly 13,000 crores of debt on the project. And that was obviously the interest costs and was eating up into the project. And if you see our P&L, that's one of the few losses that we have, and probably the only loss that we have. So now I cannot move away from this project because it's a concession agreement and it's 30 plus 35 years. So we are there for 65 years. And there's a minimum equity commitment also, which is part of the concession, 26%. So what we have done there is we made an appeal to the government of Telangana. The able leadership there thought about the metro as its own metro. In fact, the chief minister fondly used to call it as Nama Metro. Nama Metro is our metro, Hyderabad's metro or Telangana's metro. And he has been kind enough to sanction a soft loan of 3,000 crores into the project. A government order has already come. That money will come in over a period of time. And once that money comes in, it will go towards repayment of the debt. So 13,000 will come down to about 10,000. Now, we have a term sheet with an investor, which I cannot reveal right now because a few condition precedents have to be overcome. It will be overcome shortly. And if that happens, another 4,000 crores of equity money will come into the project. And thereby, we will come down from 100 to 51. The investor will become 49. And if that 4,000 crores come in, 10,000 becomes 6,000. There are also chances of monetizing some real estate, which we'll do shortly. So the debt will come down to nearly 4,000 or 5,000 crores. As you know, recently we also restructured the loan, and an interest rate which was 9.7 odd percent was brought down to 6.2 odd percent. So with this, whatever can be done financially has been done in the project. We just have to hope that the offices open, people start going back to office, then the project becomes cash flow positive and even viable over a period of time, over a period of short time. And that's the best that can be done in Hyderabad Metro, and we sort of move it away from the balance sheet by doing an InvIT over a period of time, for which also we have principal permission from the government. So it may be taking 2 to 3 years, but we will do that. On IDPL, we have a term sheet with a prominent investor. We're already down to 51%. During the course of the year, we'll move IDPL away from our balance sheet, and L&T IDPL will be no more an L&T company. It is work in progress, and we'll announce it as it happens. Nava Power 2, we are talking to an investor, and we hope to move the project away from our balance sheet more or less by the end of the year. So with this, if you can see overall, we had a debt of 1,24,000 crores. Out of that, 84,000 crores was in our L&T Financial Services. But frankly, that is not a debt. That is the way the business is run. It borrows money and lends money. So from an analyst or financial point of view, that is not a debt. So real debt was 40,000 crores. Now in that, if Hyderabad Metro 13,000 crores moves away and 6,000 crores at Napa moves away, all we have is 20,000 crores, which is what is the working capital requirement of L&T. So frankly, we become a zero debt company by the later part of the year.
The other thing I wanted to understand is the new businesses. Mr. A.M. Nayak was calling them Subramanian's startups. You have a significantly interesting portfolio there, L&T Sufin, L&T Next. What's the plan with that? And could we potentially see more IPOs going ahead from the parent company with these companies growing in size?
You have to do something, no, Rachita. So he allowed me to do something, and therefore now he calls it my startup, and that's fine. He's a lovely boss, and he has his ways of going about things. We have, with this views on it, started 2 or 3 startups within the company. One is L&T Edutech, which is in the higher education space. Uh, it is to teach engineering, civil, mechanical, electrical, chemical, and such. We started it as a B2B platform. It seems to have done well. We've got more than 80,000 students enrolled right now, and seems to be going the right way. We'll also end up doing professional teaching, as well as move into vocational training. And it seems to be received well in the market. It is something unique we are trying up. Because most of the education startups are in the K0, K12, and such spaces. And this is the first time we are offering engineering as a e-com solution. So let's see how it goes forward. That is one. Second is we have started a startup called Sufin. This is to trade on engineering goods between MSMEs, SMEs, and medium industries. It has also been launched. It's doing about 15 crores run rate right now. 15 crores of sales per month right now, not run rate. Seems to have caught on traction. Seems to be doing well. And this again something which is unique because there's hardly any e-com company in the engineering space. And this is probably the first e-com on the engineering space. And let's hope it also does well. So that's where we are. Time will tell whether these are good startups or where it goes. And I hope I can repeat the winning formula.
Fair enough. Best of luck for that. A quick question. You announced the merger of L&T Infotech and Mindtree very recently. And of course, since then, you have been, talking to investor community and of course the employees as well. Since the time you announced, I mean, obviously this was a thing that was expected, but since the time you announced and now, and from your interactions with the different stakeholders, uh, what are the challenges you foresee going ahead for the merger?
There's no challenges. This is when I acquired Mindtree, you were the first person phoning me up every second minute asking when are we going to merge it. And we could not do it at that time because the ownership had left. I had to settle down the company. We did that. We have now grown it. It's come back to 25% growth. It's showing 15, 16% PAT. So it has achieved what it needed to achieve. It also so happened that around the time we took over, COVID happened, and Mindtree was big in travel and hospitality. And that sector went down pretty bad. And now we have brought it back. So the logicality was to put it together, because to have two IT companies and more or less with the same offerings but in different sectors was not the right way to go forward beyond a point of time. And therefore, the idea was to put it together, bring out the synergies between both. One is very strong on ERP, one is very strong on customer experience. A combination of this is a very positive effect on the clients from their perspective of getting sourcing both from the same organization. And that's what we have attempted to do. And subject to regulatory approvals, this is one of the most positive things to happen within the organization from an industry point of view, from a customer point of view, and from a stakeholder and shareholder point of view.
Mr. Subrahmanyan, you really stand at a juncture where your order book is at record high, and you have so many different businesses across so many geographies, each having its own story. A, a question for you personally: how do you break your time between the businesses? I mean, what is how is your time divided between the different businesses that you are doing, and what really is taking the core of the time?
Once you become a CEO, nobody wants you to be in their business. And L&T, as you know, is run by vertical heads. So all my colleagues are fantastic people, lovely people, and they don't want me to interfere in their business at all. And they're doing quite well. So I'm happy coming to office, having a cup of tea, talking to you, and going back.
Then what is motivating you the most to come to office every day, and what is the most exciting thing going ahead for you?
I think one always tries to improve on what one has, right? It's a great platform given to us by Mr. Naik, and definitely so. So the biggest agenda on the mind is to take the platform forward to a higher plane, and leave it there whenever one has to move out from that place. And that's the biggest agenda today. We have a robust strategic plan which has been extensively discussed within the organization. The key thing would be to implement the strategy to its objectivity and spirit, to see how to move it forward. As we move forward, economy always gets challenging, right? There's disruptive competition, there is more terrific competition, and there's more smarter competition, there's more entrepreneurial spirit being let out. And we need to look at all that and see how we can be more robust, more resilient, more entrepreneurial, and more aggressive in our way of business. So that takes a lot of time. I think the other important thing is to develop talent. I think if we need to achieve a strategic plan and be a 2.73 lakh crore organization by 2026, I think we need huge amount of talent within the organization. So I do spend a lot of time on mentoring people, talking to people, spending time with people, meeting people, even recruiting people. So a lot of time is going into all that, and that is probably the single biggest chance and opportunity that I have to develop the right set of leaders from a succession point of view. That's very important, and me, including Mr. Naik, still, and some of my colleagues also spend a lot of time on it, and that's from our point of view very important. The third is technology. I think we need to be very abreast of technology, need to be very abreast of what the world is moving into. We have taken some steps. I think these are the right steps. We are in touch with many of our peers and competition and consultants and such, including world leaders. And we believe we are doing the right thing. Time will tell, but that's the way to look at it. So it's a very positive feeling. It's a very robust feeling. Sitting on a good backlog, and therefore there's no desperateness about anything. It's a positive outlook. It's an engineering company where we get up in the morning, rising up to challenges on what to do. We hope to become a technology solution provider of eminence in the near future, and that's the way the platform is moving.